Hello, I'm just sitting in open house here and thought I'd jump on and talk about buy downs. There's been a lot of talk about mortgage rate buy downs. You may have heard the buzzwords, the 3-2-1 or a 2-1 or a 1-0 buy down. So I thought I'd just briefly explain what that means. So briefly, if you get a 1-0 buy down, what that means is that for the first year as a buyer, if you get a 30-year fixed rate at, say, 7%, that your payment the first year will effectively be as if your rate is 6%. And the way that's done is the seller will have to agree to this prior to closing through the contract process. But the seller will set aside money in an escrow account that will subsidize your monthly payment. So if you did the calculation of what your payment would be at 7%, and then you did the calculation of what your payment would be at 6%, and you found the difference in those two, you would add that up, whatever that dollar amount is, the seller sets it aside, and then for the first 12 months, you make a payment as if your payment is 6%, and the lender will just take what they need from that pool of money to make the payment whole. And that will happen for the first 12 payments. Then on the 13th payment, you make your traditional 30-year fixed 7% rate payment. So this is a negotiation between the buyer and seller. If you have like a 3-2-1 buy down, then that's going to be potentially a lot of money that the seller would be setting aside, because that'd be as if you got a 7% 30-year fixed rate. The first year, your payment would be as if your rate is 4%. Second year, 5%. Third year, 6%. So that would be quite a calculation, or quite a amount of money that the seller would have to agree to set aside at closing. And so now, as we get closer to get more into this higher, into this new interest rate environment, there's hope that within the first 12 months that rates will begin to come down a little bit more. So the 1-0 buy down is becoming much more attractive now. Number one, because it's easier for the seller to agree to, and number two, buyers are thinking that within the next 12 months, rates will subside. So currently, as of the filming of this video, I am able to provide a $600 credit toward an appraisal for any buyer that utilizes a 1-0 buy down. So that is available now. It does create quite a bit of benefit for the buyer. It's not that expensive most of the time for the seller. But the key point here with these is that ultimately, you do still have a 30-year fixed rate. You have a good mortgage. You know what the most your payment could be based on your interest rate. So these are not adjustable rate mortgages. These are not, mortgages that have a balloon payment at some point. They are your good traditional 30-year fixed rate, but you get a little bit lower payment for the first year, 2 or 3. Hopefully that clears things up for you. Let me know if you have any questions. Thank you.